Welcome all, Ben here from Elliott Wave Pro. Today I'm going to go into what an impulse is, according to Elliott Wave. And I'll also go into how we use the MACD to count waves as well. There's nothing new about counting waves with the MACD. It's been around pretty much ever since the MACD come out. People have been counting waves with the MACD. I've been trading for around 17 years. At least 10 of those years, ever since I've done a Elliott Wave course called Elliott Wave DNA by Nicola, we've been using the MACD to count waves. He was using the RSI. I've always liked the MACD, and I've always used the MACD. But firstly, there's three types of motive structures. We have a leading diagonal, and then we have an ending diagonal, and then we have the impulsive wave, which is also known as like a 5-3-5-3. A 5-3-5-3-5 pattern. So we like to see, in the corrections, for example, here we got an A, a B, and a C as a running flat in the wave 2. And in this wave 4, we have like three waves as well. We have an A, B, C, an expanding flat, and then we have an A, B, C in the wave 4. So this is the 5-3-5-3-5 structure. Usually we only see the three waves in the impulse in the corrections. In here, in wave 1 and wave 3 and wave 5, you'll get subwaves on the lower time frames, a 5-wave structure like this is here, an impulse. So if we look at this, we got 1, 2, 3, 4, 5 waves. If you've been following my weekly outlooks, you'll see that we've been looking at this for a very long time. So there's rules to the impulse. The first rule is wave 2 can never fall below the starting point of wave 1. So this is wave 1 here. And in this case here, you see wave 2, even this A wave down in here didn't break the starting point of wave 1. So that's fine. That's our first rule. It wasn't broken according to Elliott Wave. Rule 2 is wave 4 can never go, wave 2, rule 2 is usually always the longest wave, but it can never be the shortest wave. So the wave 3 can be shorter than the wave 1 or the wave 5, but it can't be shorter than both of these waves. It can never be the shortest wave. Most of the time in a impulse, it's always the longest wave. Wave 3 is always the longest wave. Rule 3, wave 4 can never enter wave 2. So wave 4, as you can see here, never entered that territory of that wave 2. If we get a line here at the low of wave 4 over here, you can see the ending point here. It never come into the territory of that wave 2. Then we always like to see in the wave 5, in an impulsive wave, it breaking the ending point, wave 5 breaking that ending point of wave 3. And also we always like to see the corrections, the wave 4 and the wave 2, of a similar size. And as you can see here, this is a perfect example how wave 2 and wave 4 are of a similar size in time for that correction before we get that wave 5 up. Now counting the waves using the MACD, there's a couple of different MACDs. This is the one I've used. They're all very similar, but I'm not going to go into the different types of MACDs. Maybe you can write in the comments if you want to see the different types of MACDs. They all do exactly the same thing. But counting the waves with the MACD, we want to count these crosses on the MACD. This one here, we have 2 crosses down and we have like an A and a C. So it's crossing down the MACD in the A, the B, and the C. We can see it on the MACD and we can count it. This wave 1 wasn't really very impulsive, and we got a deep A wave in here. So we never got the cross down on the MACD, but in the wave C, we got that cross down, so we can count it as the wave 2. So counting this on the price action, we got 1, 2, 3, 4, 5. On the MACD, we've got 1, 2, 3, 4, 5. Usually in a impulsive motive structure, wave 3, we don't have any bearish divergence between wave 1 and wave 3. It's only when we get into wave 5 where we get that bearish divergence between the ending point of wave 3 and the ending point of wave 5. We get that bearish divergence showing on the MACD in that wave 5. So now that's pretty much an impulsive wave according to Elliot, as he's written it. There's 2 things that can happen now. If you've been following me, usually I like to see in the wave 5, the target, the 123.6 is your first target and the 161.8 as our second target. That's what I show in our group as our targets. I mean, I done 3 live trades last week. All of them, not one of them was a losing trade, and I done them actually live, taking the setting up the trade, entering the trade, monitoring the trade, and getting them to break even, and doing that. That's what I call live trading. I don't call just going over the charts in live time. I don't call that live trading. This is what I do for my group, live trades. Showing exactly how I entered the market. You won't see my entry system anywhere else. It's something I've developed over the 17 years that I've been trading, just like the way I do my analysis. It's something I've worked on throughout the 17 years that I've been trading. So, now there's 2 things that can happen. On the lower time frame, we can get like 1, 2, 3, 4, 5 down in here. A larger correction as a B wave, and then we get another 5 down in here. This is called a zigzag correction, and then we get 5, 1, 2, 3, 5. So that's where that 5, you get 5 waves up in here. You get 1, 2, 3 in here for your correction, another 5 up in here, sub waves in your wave 3. Then you get another 3 waves in your correction, and then you get another 5 sub waves up in your wave 5. According to Elliott Wave, sometimes you don't always see these sub waves if you're counting with the MACD. The MACD basically helps us to cut out a lot of the noise. For example, in here you can see that we have a correction in here, but we never got a cross down on the MACD. It's internal. It's a smaller correction than these corrections, so it's internal. It's on the lower time frame. And it looks like we just got 1, 2, 3 up in here. Whereas we should, according to Elliot, we should have 5. We don't always see the 5 waves, but you know, I mean, we do see these 5 wave structures a lot. You know, we see them quite a bit. I mean, if we go over here as well, you know, we got another 5 wave structures over here as well. We got like 1, 2, 3, 4, 5. If you followed me, we were looking for this wave 4 in here. I've got it as an X here, but it's a wave 4 according to Elliott Wave, and we had that bull hidden in here. We were looking for that wave 5 after the wave 5. I don't think we did actually. We may have got the bearish divergence in here, but I think we may have lost it. We did lose that bearish divergence in the wave 5. Usually we do get the bearish divergence. Usually, like I say in, you would have heard me a lot if you follow me, my weekly outlooks. If we get 5 up and we lose that bearish divergence in the wave 5, like we have in this motive impulsive structure, I'm just looking for 3 down, a correction, and then another 5 up. Well, that's pretty much what's happened, but this one hasn't actually. These 5 up here are a lot shorter than this impulse here. So now, you know what, there's either 2 things that can happen here, looking at the higher time frames and what I just showed you there with that 5 up. We got 3 down and another 5 up here, but it didn't go anywhere. These 5 here never went anywhere near breaking that top for a 5, 3, 5 structure. So that's why this here, this 5 in here, can be like an A. This is a B. This is a C here, and we got a flat here, and then we get an A, B, C. So we're looking to see what is happening in here. We're looking for that correction. Whether this is going to be motive on the downside on the H1. So we get 1, 2, 3, 4, 5 larger correction, and then we got 5, 3, and then we get another 5, 3, 5. You know, and this is a flat. And so we get 1, 2, 3, 4, 5, 1, 3 up in here, correction. We get 5, 3, 5 in here. So we get an impulse, correction, impulse, correction. Sorry, impulse, correction, impulse for a flat. And then we get impulse, correction, impulse. In the wave C, in the wave A and the wave C in a zigzag, we're looking at an impulsive structure, a 5 wave structure. So we're pretty much, we have two scenarios here now. We either go and break this low, which is more than likely, we go and break this low here, or we just get a correction back to the 50 fib. So we get like 1, 2, 3, 4, 5, 1, 2, 3 waves up in here, and then another 5 down in here. So we just get an A, B, C, and then 5 up, 3 down, 5 up. Or this turns bearish and we get 1, 2, 3, 4, 5 larger correction, 5, 3, another 5 down, breaking the low. So that's the scenarios that we can get now. How we can trade this is we look for the wave 4. We wait for this wave 4 in here. So we're looking for a time factor of similar size to that. Whenever this wave here ends, this wave 3, and then we're looking for that wave 5 down. So you're looking to trade that wave 5 down at this particular time. Only after you can see a correction that's finished, then you can trade that wave 5 down. So I hope that covers a few things with the impulsive motive structure that Elliott Wave has given us. If you have any questions, just let us know in the comment section.